Yeah, I think as the FM very rightly said, we don't create the expectations, so we can't moderate them as well. It's something that's a creature that's a creation of the external environment, and I think that it's something that the government has to live with, contend with, and it has to deal with that. But noting that, as the FM quite rightly said, that it's one amongst 365 days, but it's an important day amongst 365 days. Yeah, so I think we need to contend with both aspects of that. That it's important, but it's not everything.
Just talking about the fiscal landscape of our budget-making exercise, Professor Subramaniam, many people that we've been speaking to believe that the union government is unnecessarily losing a sleep over meeting the fiscal deficit target to the last decimal point. Why not allow public sector investment to boost so that it revives growth, even if it amounts to a few fiscal slippage points here and there? Is that something that finds favors in North Bloc as we speak? Or are you going to be unduly worried about what rating agencies may say after all?
That's a call that we're going to make in the context of the budget. I think what is clear is that, and we had said this in our mid-year economic analysis, if you remember, that, given the state of our Indian private sector and the corporate sector, to durably raise growth, you need to raise investment. And so this time around, the public sector may have to, take a bit of a lead in the process. We also need to do all the things, to get private investment up. But in the interim, we may need to. So the fact that we need more public investment, I think, is generally accepted. And the FM and the Prime Minister have been saying it everywhere. I mean, the question is that how do we reconcile that with our, medium-term fiscal framework? And that's something that we're going to discuss in the months ahead, leading up to the budget.
Do you believe rating agencies are far too conservative on India because the only metric that they want to keep watching against is fiscal deficit targets, which may not work to the benefit of our own economy?
Well, I think one has to do it both ways. One has to, take into account what India's needs are, but we also have to take into account what, markets and the world expects of us. So I think both have to be taken account of, and, hopefully we can do enough to satisfy everyone.
The last 1 month has actually seen the fiscal landscape change as far as the world economy is concerned, much to India's advantage. Crude oil has crashed, commodity prices have softened. How does that really impact your own fiscal exercise? What kind of an elbow room does that give you in budget making?
Well, it does give us a lot of room in budget making in two senses, right? One is that we've been able to, deregulate diesel and eliminate the diesel subsidy. So all petroleum-related subsidies have come down, so that gives us space. And of course, the other thing, the way it's helped, of course, is that, world prices have come down about 45 to 50%. We've, shared some of that with the consumer, but the rest we've also, the government has taken advantage to increase government savings as a result. So we've been helped in both ways, in both in reducing subsidies, but also in getting some more resources and savings by way of the excise taxes we've imposed on diesel and petrol. So it's helped both ways.
I have a last question of you. There is a lot of talk around the US interest rate hike. Many people expect it to happen in the second half of this year. Some expect it to happen in the last quarter. But whenever it happens, and it's an eventuality which it will, Janet Yellen is going to take that decision. Whenever it happens, do you believe this time around Indian markets, Indian currency and the economy at large is far more braced up than it was in September of 2013?
I mean, there's absolutely no question. Just look at the basic numbers. Inflation at that time was in double digit. The latest reading is 5%, and it was 5 even though we expected it to be much higher because of base effects. And so inflation has come down dramatically, and we expect it to remain pretty moderate going forward. The current account deficit has come down remarkably. The government is committed to fiscal discipline, and of course, investors are flocking into India rather than leaving. So on all counts, we are much more resilient than we were earlier. And also, even in terms of the growth outlook, you have to factor in that, the oil price decline is going to help both consumers to spend more and for profit margins also go up, so firms can also spend more. And the fact that inflation has come down also gives us more space for monetary easing. So there is a kind of positive growth impulse as well. I'm saying apart from the macroeconomic situation, there is a positive growth impulse. So it's really everything coming together in a way that, if we seize this moment, it could really be terrific for India.
I thought I was not going to ask you a question on monetary policy, but you've cued me to my last question. Governor Rajan has relented on rates, 25 basis points rate cut. I have two questions to ask of you. In this calendar year, how much do you expect rates to go down by? Please do not say I'm not going to give you a number. And the second question really is this a decisive turn in the monetary policy stance, inflation, of course, withstanding?
No, to take the second question first, I mean, if you read the RBI's policy statement itself, I mean, they suggest clearly that this is not just a one-off cut in the rate, but it's a change in the monetary policy stance. Yeah. So I think that, in their own words and in taking their intentions from what they say in the statement, it's clear that if the data are positive on inflation and if all other factors come together, the RBI itself believes that there's more room for monetary policy easing going forward.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.